The higher volatility environment and very headline sensitive environment continues. Very easy if you're a new trader to get caught on the wrong side. We're going to talk about 3 common mistakes that specifically new traders can find themselves making in this video to avoid, guys, specifically in this crazy environment.
Yeah, look, these kind of markets where you see this type of volatility, it's a tricky place for any beginner, let alone any trader, to get into and try to be profitable in, but especially when you're just starting out. And there's something that we do on our trading floors, or it has been a bit of a tradition that it doesn't always apply, but we used to say trainees sometimes sit out the first 10 minutes and also don't trade the last 10 minutes of the day, sometimes even 15 minutes. So if there's one thing you don't have to do, you don't have to trade the pre-market or 9:30 to like 9:35, 9:40. And you especially don't have to go all in at that moment. It is incredibly common in a very volatile market that you will get all kinds of head fakes and traps right at 9:30. And sometimes allowing a stock to pick a direction, for the market to pick a direction, is the way to go. There's plenty of data. You can always paper trade. You can always try to learn on the fly by observing that open. Now, the example of something like Square today, just you had a gap down in the stock, a small gap down. The market looked like it was trying to bounce. It was positive news early in the pre-market, and you're gearing up on a depressed name to then have a double top breakout set up at the open. And it's a trade that a lot of people would be looking at here. But the speed with which it reversed and how it ended up reversing was just all kinds of a rug pull. And then really the better trade was to short. But unless you sort of have a sober mind to be able to sit back and look at it, watch the consolidation. At this point, okay, well, if it wants to make the breakout, let's see it actually happen. If it wants to pull down, it still has to test the pre-market lows. There's a lot that still has to go on before you can really determine that direction. And that first 10 minutes, it's just easy to get chopped around. You take that breakout, maybe you get $1. If you hold it, you can end up getting stopped right out in just a matter of minutes. You take the consolidation long, it's the same thing. But really, when I look back at it, the best trade is when it tried to reclaim those highs after establishing that it was taking out the bottom and then couldn't go. And then now it's a big time short. And then that same level that it shorted off of, which is about $102, go back to where it turned in the afternoon. It's about the same price, right? So the more significant price areas came in after about 15 minutes or so when things had calmed down.
Yeah, for sure. Look, yeah, great advice. Like, just take it easy. And I think that's what we started with as well, like playing some of these breakouts in the morning. It just, if they're not working, then you don't need to confuse yourself and get started on that a little bit too early. Look, for me, it's going to be kind of the same thing. And it's just like, keep it as simple as you possibly can. I feel like when a lot of beginning traders, they're looking for mentors, they're looking for advice, they're looking to say, oh, why are you making this trade? And then a lot of I don't know, I don't want to say experts or anything like that, but you're reading things online and it's like, if this breaks that and then that and the RSI is matched up with this, MACD minus that, divided by stochastics, it's just, all that doesn't make sense, but that's the point, right? Is that I look at something like this, and this is just an example that I pulled, right? And here it is, this is MasterCard, and this might mean something to somebody. So that's great. But you have Bollinger Bands here. You have, the middle stochastic. I don't know what this is. This might be some sort of a moving average right there. Moving average, MACDs, CCIs, different things like that, different signals, different volume, just a whole bunch of numbers. And I feel like when you're looking at this, you're going to find reasons why something worked. At the same time, I'm going to look at it and show you the exact same reason maybe why it didn't work. So my advice really, especially when you're trying to navigate through some of these crazy markets where we don't really know what's about to happen, is if you're looking at too many things, you're going to get, it's like finding a needle in a haystack. You're going to get too many indicators that are just going to throw you off. Like, should I get out? Should I stay in? What stock looks real good? And not to say that my charts, are the best, because they're not, but this is what I have. It's volume weighted average price in a 50 period. That's it on a 1 minute chart. On my daily, I have a 200 and a 50. Now, I'm not trying to make, we trade differently, and that's the point, is understand, if you're a beginning trader, try to keep it as simple as possible. That way, when you're back testing and you're trying to find out, what indicators work exactly and what don't, at least you can sort of pinpoint here what you're looking at and not say, well, here, today I'm going to remove the MACD and insert the Bollinger. Oh, that didn't work. Okay, now I'm going to go do that and this and that. So, just be very specific with what you're doing and I think it will work out okay. So that's really my tip. Just keep it simple in the beginning and then add layers as you understand the base layer.
Maybe not a surprise, but mine will also, guys, add to this very similar discussion and very similar idea, and that is over trading. You have to avoid the urge, once you get stopped out of a trade that was in the wrong direction, to continue to pound on the keyboard. It's very, very easy when you see stocks going crazy to jump back in, jump back out, jump back in, jump back out. As the guys were saying, have a plan, execute the plan. Once that plan is no longer valid, you got to walk away from the keyboard. So there we go. 3 tips or 3 mistakes to avoid in this crazy environment.